In some ways, the centre's recent track record on divestment has been mixed. Air India was finally privatized and the Life Insurance Corporation came out with an IPO. But still, stated divestment targets have mostly been missed in the past few years. This year, the Finance Ministry's Department of Investment and Public Asset Management, DPIM for short, has a priority, which is to complete pending transactions.
So what are these pending transactions? These plans feature Shipping Corporation of India, Container Corporation, Bharat Earth Movers Limited, and the Nagarnar Steel Plant of the National Mineral Development Corporation. There is also the pending privatization of IDBI Bank, though technically it is not a state-owned bank anymore, with LIC Limited and not the centre being the majority shareholder. Some of these transactions have been pending since 2019. It may not be smooth sailing though. There will be challenges similar to the ones seen in the COVID-19 pandemic. With most advanced economies expected to sink into recession in 2023, investors will be cautious. Despite such challenging conditions, the centre may add some new mid and small cap companies to its list of privatization in the coming financial year.
Disinvestment receipts stand at around 40,000 to 50,000 crore. And so what we expect is that despite the setting a target of we have kept our numbers around 50,000 crore, but we do expect a shortfall in that as well. So downside risks do remain for this target in terms of in terms of the unfavorable macros and the higher interest rate regime, and the cost of capital raising of capital is an issue these days. So considering these into factors, the unfavorable macros, the higher cost of capital, we do see a shortfall in our target of around 40 to 50,000 crore, which we have set.
After years of unrealistic divestment targets, DPIM had a more achievable aim of 65,000 crore rupees in financial year 2022-23. It has garnered 31,106 crore rupees so far. Efforts are on to reach the target, even though DPIM Secretary Tuhin Kanta Pandey has made it clear that some pending big-ticket deals like IDBI Bank will happen next fiscal. Over the years, there has been a slight change in how the government approaches divestment, whether through privatization, initial public offerings, or minority stake sales. The approach is more towards multi-year plans rather than just yearly targets. Even then, Business Standard has learned that the target for financial year 2023-24 may be lower than the current year. Additionally, as per some reports, DPIM wants dividends from non-financial state-owned companies to be a part of the overall divestment target. So far, dividends have been counted under non-tax revenue for the government, while divestment is seen as a non-debt capital receipt. This means that these proceeds can only go towards the centre's capital expenditure.
Certain sectors like banks, for example, there is significant sensitivity around strategic divestment, and which is why probably they will take backstage. And certain sectors which are more commercial in nature, where it is largely, anyway, the sector is largely run or dominated by private players, there probably we'll see higher prioritization. That's my viewpoint, because you see, one is the government's intent, which, as I said before, is likely to be influenced by the fact that it is election year. But I think the other side is equally important, which is in terms of the private sector interest. And that's where I do expect certain sectors to be more amenable to attracting investment than certain other sectors, given the global economic situation which we have on hand.
There is also the matter of a planned privatization of 2 state-owned banks and 1 general insurance company, which the finance minister announced in 2021. While no candidate for privatization have been announced, there was a lot of resistance from bank employee unions. With key state elections coming up in 2023 and the Lok Sabha elections in 2024, it is unlikely that the government will move ahead actively with these plans.
The past few years have been tough for the centre's divestment and privatization plans. Global markets and investors' money have been in constant flux, mainly due to the COVID-19 pandemic and geopolitical uncertainties. The effects of the war in Europe, the spike in commodity prices, and the actions by central banks worldwide are likely to make investor interest in the centre's PSU offerings more uncertain. In such a scenario, DPIM will aim to get long pending deals across the line.
If you like this video, share it and subscribe to Business Standard. For more news, views, and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram, and LinkedIn.